Wow, that was gong. This is the Naked Short Club on Resonance, and I am Dr. Stu, your host. Before we move on to our second guest, let Dr. Stu remind listeners that not for profit Resonance relies heavily on your support, your donations, to keep the station on the road, on the air, and at the leading edge of all that's best in broadcasting. So please go to the Resonance website on www.resonancefm.com and make a donation to the station. Now, here is our second guest. Welcoming back to the Naked Short Club, it's the founder and chief executive of the Beyond Investment Group, Claire Smith, whose expertise and convictions are brought to bear on um, investing that is nature positive, carbon negative, and animal free. This is expressed through initiatives like the Beyond Cruelty Foundation, advocating for the UN SDG 18, and Beyond Impact VC, the only female founded SFDR Article 9 dark green global VC of its type. Now, Claire, we have all sorts of angles from which we can approach this. But why not start with, as it were, a satellite view? Um, what are the meta trends, the mega trends at play in the space at which you're looking? Over to you.
Hi, Dr. Stewart. It's great to be back with you again. So yes, megatrends and metatrends. The one thing that none of us can ignore in terms of a megatrend is the essential quest for net zero or ideally carbon negative consumption, and this is something that faces all of us, the essential requirement for a more sustainable future, which what we're doing obviously fits very squarely into. Coupled with that, and obviously with the work done by the TFND last year, is the importance of biodiversity, and these are both things that nobody can really ignore. They touch upon questions of resource allocation, obviously the issues of climate justice, etc. But the key thing is that we really need to address our production systems in order not to make these issues worse, and ideally improve the situation in terms of the climate and biodiversity. In terms of meta trends to that, I think that the consciousness of people in terms of what they could or should be doing is increasing, and so people are wanting to be empowered. People are wanting to make changes in order to address these issues. They don't want to rely on government. They certainly don't want to rely on big business, and so this rise of potentially the conscious consumer, supported by demographics, is one key meta trend, which is also driving this change. Another meta trend is the impact that corporates can have with their own purchasing decisions, thanks to increasing regulation and reporting requirements around particularly carbon, but also coming into the fore is nature impacts as well. Corporates are themselves having to change their purchasing decisions and start looking at different types of products that allow them to reduce their footprint in these areas. So I think that those meta trends are somewhat supportive to the overall change that we're investing in, which is driven very much by the mega trends and the need to find a different way of consuming and producing products for humans.
Now, one of the trends of which Dr. Stu's aware, the fact that in a lot of the so-called developed countries, for example, in Europe, France, Germany, the UK, per capita, their consumption have been declining, and this is due to more quite clearly than simply what's been happening in the economy generally and affordability being at play or otherwise. But if we actually bring this down to the level of what you're investing in, um, I know that you, as part of your activities, established an investable animal-free ETF. Um, there's been a lot of evidence that a lot of ESG driven or infused investment has tended to outperform investment without a moral compass. And I'm wondering, how has this sector as a whole done in relation to mainstream investments? That's one question. Allied questions, and we've got plenty of time to delve into these, would be, what sectors are most active by way of the research and development work that allows you to, invest in companies or enterprises that are relevant, and also, where the, aside from the activity of that sort, at an investment level, where are the greatest opportunities?
Certainly. So, yeah, I'm happy to relate the fact that in terms of the performance, I can't speak to every ESG fund at all, but the most recent performance data on VEGN, which has just passed its fifth 5-year anniversary, in fact, being launched in 2019, it has outperformed since inception. Obviously, from one year to another, there may be underperformance, overperformance, but this year has been relatively good. We are outperforming the S&P on a 1 month, 3 month, and 6 month basis, as well as the since inception. So performance has picked up quite nicely over the last six months after a less positive first quarter. But what we found, particularly in terms of our research for VGN, was that there were certain sectors where the prevalence of animal usage was the greatest, and so essentially that's where we focus our attention on in the VC. It's a very obvious kind of mirror image that if the one fund is avoiding the use of animals and ends up being underweight in certain sectors, particularly in the consumer materials, pharmaceuticals area, particularly in consumer, both discretionary and on the consumer staples side of things, then it makes sense for us in the VC to focus on those areas in order to create new companies that can grow and enter those sectors and can become investable assets for the ETF. So the areas that are the most relevant for us are this nutrition, ingredients, pharmaceuticals, and materials sectors, both in terms of the animal usage in those sectors, but also in terms of those elements, as opposed to just food generally. We're focused on nutrition. Why? Because we don't think it's just a question of throwing more types of animal-free food into the market, but also focusing very clearly on the need for that nutrition to be high quality in order not to compound any of the problems that we already see in the population in terms of issues of diet, ultra-processed foods, etc. Again, with the ingredients, it's not just a question of any old ingredients that are animal-free. It's very much about those which aid that transition, not just in terms of replacement, but also in terms of improving the functionality of foods and those ingredients which work the best in recipes. In terms of pharmaceuticals, obviously our focus is on things like animal testing alternatives and drugs and other consumer products that have been derived from animals. We're looking for far better performing alternatives in that space as well, and again on the materials side. So we're focused very much on those sectors and particularly sub-industries within those sectors that have the most relevance in terms of accelerating this transition, and which coincidentally also have, referring back to my previous answer in terms of the megatrends, also have the most relevance in terms of the climate and biodiversity.
Now, you mentioned sub-industries. It would be really interesting, I think, to go into, to drill down a little bit into these different categories that you define: nutrition, ingredients, pharma, materials. I'd also be interested to hear your take on something that is perhaps a misconception, but I believe Dr. Stew believes that quite a few people out there will be thinking that, particularly with nutrition, alternatives to animal protein will almost invariably end up being quite highly, heavily processed. And I wonder if you could speak to that, as well as perhaps on the downside, some of the issues that have been faced by meat substitute companies. And at the same time, just give it, take us down into greater detail, the kind of activity that we're seeing in those different sectors, if you don't mind.
Yeah, sure. Yes, so I think, as you say, it's possible to drill down further, and certainly in the kind of nutrition and to an extent the ingredients case, an appropriate way to drill down is possibly to think about the different technologies which are used in each. So in some situations, it's about extraction of protein from various plant-based materials and breaking down those plant-based materials in a way that sort of separates out the protein and hence creates isolates, so which have a higher protein content percentage by mass. And that's useful from the perspective of the nutrition in terms of replacing the protein which has been derived primarily from animals to this point. There is some processing required. Some would say that that's an issue, but it's not denaturing the product significantly. A bigger issue is possibly the waste products that are derived and the kind of solvents that are used in those processes. Other aspects would be generation of specific proteins using techniques such as precision fermentation, which we've invested in quite significantly. Where the specific protein which formerly has been derived from animals can be engineered using microbial fermentation, often using yeasts. And there, given that the output is a precise protein, I'm not sure that that's processing in the way that some people seem to be quite negative towards. It is creating a protein, but it's not necessarily, there's not necessarily an issue of processing there. It's deriving something which we're already eating, but just from a different source. In terms of the cellular, this has the potential to be a much cleaner process than the deriving of the cells from animals themselves. With a lot less to be concerned about in the way of, for example, pathogens, as this would be the cultivation of cells. So these are different types of techniques which are being used. And just to touch upon that point of the processing, they're definitely using different techniques, but I wouldn't necessarily consider that as the type of sort of negative view or opinion around processing. It's just different ways to make the same products. You asked me to speak about some of the issues in terms of meat alternative companies, and I think that basically the space has evolved and is evolving in a better direction than maybe it started. There was companies putting products out into the market initially, and obviously a trend that developed because the quality of these products, and you can't deny this, that the the general improvement in terms of plant-based products was really pronounced in the period sort of 2018, 2019, with a lot of innovation going on in order that products such as the Beyond Meat, the Impossible Burger, some of the milk alternatives as well, I'll particularly highlight one of our portfolio companies, Mighty, their products were sort of head and shoulders above what was previously in the market in terms of plant-based products, and so that generated a trend. But unfortunately, what happened over that period of time in some of the meat alternatives was that there wasn't such a first there were competitors that came in, particularly amongst the large manufacturers whose products were not necessarily as high quality, and that put off some people. Because they tried a product, didn't like it, and then basically tarred the whole sector with the same brush of, I don't like any of these plant-based products. But secondarily, there was less of a focus on health, and that meant that the sector was susceptible to criticism as a function of, long ingredient lists. You have to consider that obviously these products are recipes. They're not, a single ingredient that you might consider meat to be. That's actually false. That's actually a false perception, because meat, when it arrives on the shelves, is not just what's come from the animal, but also a lot of other things that are being used to improve its look and color and preservation, etc. But certainly in terms of the plant-based, it was all kind of listed on the ingredients, whereas it isn't in the case of meat. And that led to some criticism, some of it justified, but a lot of it was also coming out of meat industry lobbies that were, looking to damage the plant-based industry, which they saw as a competitor. However, having said that, it has caused the plant-based industry as a whole to question the use of certain additives, etc. And also to look towards more natural products in order to improve the taste, the sensory experience of eating these. And that's generally a good thing. They're being much more conscious, for example, of sodium content, the saturated fat, because certainly from my perspective, I don't want any products in this space to replicate the negative aspects of eating meat or dairy, such as high cholesterol, etc. So I think that the space is moving in a better direction. Certainly, as a manager or advisor to funds, we have always, since our inception, been very conscious of this and actually disregarded quite a lot of investment proposals that have been put to us, because we have looked at the ingredients list, the saturated fat content, for example, various components that are being used, and as a result of that, we've actually ignored deals or discarded them, because we don't like the type of product which is being produced. So we feel that the space is coming more towards our way of thinking. So, for example, a plant-based cheese which has only 4 ingredients, which are all entirely natural ingredients. So that's the kind of investment that we prefer anyway, and we're glad that the space is moving in our direction.
That's good. You were talking about seeing deals and taking some up. I mean, how much deal flow is there in this space? And I suppose my final question is who are the investors who are backing the ventures that are developing these things?
Again, the investors have evolved over time. In the early stages, there was quite a lot of sort of philanthropic and angel investors involved. And then in the sort of from 2018, 19, 20 area, we saw the arrival of quite a number of VCs, some of which were more tech VCs or just general tech or climate tech, some food tech and ag tech VCs that were starting to sort of dabble in this area, although they had not been sort of, the starting investors in this in this part of the market. They realized that they couldn't afford to ignore it, and so they started to get involved. I would say with the kind of VC crunch that we've been going through in the last couple of years, that the more dominant investors in this area have moved towards corporates, which obviously their operations are continually giving them cash flow. They don't need to go out and raise funds. And so our partners in terms of investment in the last few years has been far more on the corporate space since, I would say, 22 onwards.
Okay.
And we've actually chosen to partner with corporates and actively encourage corporates to come into deals with us, and that's something we continue to do. We've also started to see governments put more money in through agencies. Some of that is going directly into companies, more in the way of grants, and otherwise into funds as well that have a sort of particular focus on their geographical area. So those are the type of investors that we're seeing and how it's evolving over time. When the VC market recovers, the VC funds will be a little bit more present. Right now, they're very active in terms of supporting their existing portfolio companies. So if they had already invested in this space through the period 2021 to 22, 23 and 24 have been very much a story of keeping existing investments afloat with multiple bridge rounds, very, very few actual price rounds. Because with the lack of capital markets activity, it's been really quite difficult to price rounds and to get people behind a pricing, especially new investors. And so as we come out of that will improve, and there will be more price rounds coming through. In terms of deals, there's still plenty of deal flow, but it's extraordinarily difficult for companies to find new investors. Mostly companies are going back to their existing investor pools. But having said that, in the last recent weeks, we are starting to see some new investors entering the space, which is very good news. And some VCs that haven't been so active in the space coming back or starting to look at it, because they see that the companies do have traction, and now is actually a very I would say slightly optimal time to be coming in, because the valuations have come down, but the companies that still remain in the space have got some proven traction, and with the relatively small injections of capital can move up that J curve and get to profitability within the next couple of years.
Now, this has happened in a fairly widespread way across all sorts of different sectors, because there just has been pulling back in terms of VC over the last couple of years. That will almost inevitably improve, and against a backdrop of declining rates, we may see an acceleration of that. So, in Dr. Stew's view, this is one of those sectors where, as it were, the trend is going to be the friend of what's going on. So I think it's a space to watch over the next 2 or 3 years. Claire, this has just been really, really informative, really interesting, entertaining as well. I can only thank you for being such a great guest, the same way as I thank our earlier guest, Matt Roberts of Fulcrum. Wonderful stuff.
Well, it's always a pleasure, Stuart. Thank you.
Oh, well, thank you. And Claire, I hope that you will join me in parting in the enjoyment of a delicious pint of the delicious products of our sponsors, Madoff and the beer. The pint that asks, how can all those who encourage, condone, or even participate in the open anti-Semitism in the media, on campuses, and on our streets, or equally the politicians and parts of the media who wish us to marginalize, mistreat, and abuse refugees, how can they sleep at night? on a less soporific note, as we leave you with the sounds of Gong's current guitarist, Fabio Golfetti, and his son Gabriel from their 2023 album, Lux Eterna. Listeners, just remember that doing as you would be done by and loving kindness are all that really matter. The rest is just commentary.